Two of Australia's largest travel booking companies have issued profit downgrades this week, saying businesses have been cutting back on work trips due to the US tariff turmoil. Joining me now is our business reporter, Edward Boyd. Ed, Corporate Travel Management says its earnings will be $30 million less than last year.
This is a big call from them. They put this out this morning, and it comes after Flight Centre on Tuesday said their earnings are going to be hit by $105 million less due to two things. Firstly, it's businesses cutting back on corporate travel, but it's also regular people choosing not to travel to the United States for a holiday as tourists as much as they did before. There was some stats showing that in the month of March, the amount of Australians going to the US slumped by 7%, which is apparently one of the biggest falls on record, because we know now we're seeing anecdotally reports that a lot of US airports, immigration and scrutiny is a lot higher. People are getting questioned and it's turning people off going to the United States. So we've had these profit warnings now from Flight Centre, one of the biggest travel booking companies on Australia's stock market. And today, Corporate Travel Management, another really big travel business that relies on people spending money and travelling overseas for their bottom line. So this is a big profit warning from two of Australia's biggest travel companies. They're in the discretionary retail or spending sector, and people are choosing not to spend money, and it's hitting their budgets.
And it should just be said, it's certainly just a kind of basic accounting calculation that families and businesses are taking, because the Australian dollar is so weak against the American dollar at the moment. I mean, I was there in November for the election already.
What was it worth back then?
Oh, I can't even remember, but I know I was paying $10 for a Starbucks coffee. Yes, I have an alternate milk, okay? I drink oat milk, so I know it's a bit more expensive. But I was there just a couple of months ago and it was like $70, $80 so about $140 just to get in an Uber from the airport to West Hollywood, which is 20 minutes. So surely that calculation is being made.
One other thing we've seen with Australian travellers is they're choosing to go to cheaper destinations. I know Indonesia and Bali have become a very popular place over the past couple of years, more so than they've always been popular, but more people are going there because they know they can get better value for the Aussie dollar. The Japanese yen Australia's still buying about 90 yen per out of 100 yen. So Japan's still a very popular spot as well. Here's the stock market today. It started trading the day before the federal election. It's up about 0.2%. We're almost at 8,200 points. So there's a lot of positivity from investors.
So inching a little bit closer to that all-time high.
We've had 6 days in a row where it's been in the green, and we haven't had a winning streak like that for at least 2 months, because it's just been all red every day for so long. So the market's coming back, which is a little surprising, because there is still a lot of economic uncertainty around there, particularly with the likes of Flight Centre and Corporate Travel Management today flagging big financial losses from these tariffs and uncertainty.
Yeah, absolutely. So, I mean, is the dollar likely to bounce back?
It actually has been bouncing back over the past week and a half, 2 weeks. It's back at 64 US cents. It hasn't, it hasn't been at that level.
59, didn't it?
It did, yeah. It had a 5 in front of it, which is pretty crazy to think about. So the dollar has been particularly weak. It was at a 3-year low, basically, for most of this year. It's now slowly creeping ahead. Basically, we saw the US economy deteriorated in the month of March, and it went backwards, and that's helped boost our dollar a little bit higher. We're still only at 64 US cents.
Right, so what drives it mainly? Because there's not huge fluctuations in currency and what they're worth against other nations. But I remember a time about 20 years ago that it used to be, about on par, at parity with the US dollar.
I think in 2011 or 2013, it was on parity, and we actually got higher than the US dollar for a couple of years, for a little bit. But look, there are big currency traders that move money in and out of different countries around the world in different currencies, betting on their economy to do better than others. And we had the deputy head of the Reserve Bank, Christopher Kent, one of the governors, actually did a big speech about this earlier in the week, how the Aussie dollar acts as a hedge and helps our economy sort of be safe in times of crisis. So
got it. And
it
good
also,
for our exporters
when our dollar's low,
well?
iron ore gets a lot cheaper, so people buy more iron ore, buy more of our products, because they can get better bang for their buck, and it helps us as well.
Not great if you're travelling, but a silver lining for our economy.
Absolutely.
Lovely. Ed, thanks so much for explaining that without notice to me. I appreciate it.